All right, everybody, this is John. Welcome to the free video. We're going to take a look at the earnings in Microsoft, Google, and CrapChat. So for Microsoft, they had expected move of $17, and they're currently down about, $4, give or take. So not horrible. Very much an expected move. I think the idea that they could move higher into the morning makes sense, but there's not a rip your face off rally happening in Microsoft, which I think people were definitely hoping for. If we look at Google, on the other hand, they're doing a really good job here. Google going to have a nice open, and at this point, on an expected move of $6.36, they're actually up a little bit over that already, and that actually bodes well for continued strength in the morning. So we'll see how that goes. And then for CrapChat, these guys had 300% implied volatility and a $2.50 expected move, and we're basically down a little less than the expected move down. So Snapchat going to have a tough time of it tomorrow. Essentially a very flat company used by teenagers. And I haven't looked at the earnings reports there, but I think I saw something. They're doing $1 billion a quarter, not too bad. And just see if there's any, as always, are there any growth prospects for the company? Keep in mind here on the NASDAQ, okay, we've had a great run up, beautiful daily squeeze here that fired in May. We had another squeeze that fired here, and it's over. And the question now is it time for a little bit of a rest? And I would just suggest here that we probably not guaranteed, obviously, but there may be kind of a topping pattern here, and we see some sideways, possibly for the next month or so, before anything interesting happens. Of course, we could just continue to make higher highs here, but I think 16,000 is going to be tough. And at this point, the markets are really going to be waiting for Apple, which is next Thursday, I believe. And if Apple pauses, then the market pauses, and that's kind of really where we are. Last but not least, remember that the market is essentially a derivative of the U.S. dollar at this point. When the dollar flushed hard here, that's when stocks exploded. And since the dollar kind of bottomed out here, stocks have been having a tougher time when compared to that fantastic rally that we saw here, where you can see this just dramatic kind of a move. And now with the dollar going down, the stock market isn't falling apart, and it's more pronounced in the NASDAQ. This is more of a tech stock indicator, so you can see the down move that happened there in the NASDAQ, and this kind of mimics the dollar, right, inversely. So that's what we got. And so tomorrow we'll see how the Microsoft and Google news lands with the market. And then, of course, remember, we've got the interest rate decision, and we've got Apple and Amazon the next week. So kind of look for some violent chop between now and then. All right, you guys have a good one, and we'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.